Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside. In this scenario, preferably the low of your wave 4 is in because the invalidation is the 618 at 55.3k taken from the start to the end of 3, and as you can see we got close, so it doesn't really make sense to take out this low as the probabilities are then high to also hit the invalidation. Now that would mean that you do want to hit the 618 before taking out this high. The target for your wave of 5 is the 1.236 to the 1.618 Fibonacci taken from the start to the end of your wave 4, giving you a target between 58.7k and 59.7k, nicely in confluence with this box here, an extra area of resistance between 59.4k and 60.2k. If we then zoom in to this wave 4, then on the 15-minute time frame, the only way to end a wave 4 at this low here would be an ABC, with then a 5-wave C to finish this move. But what you see on the chart as well is a vertical line, and this vertical line is a fib time. The fib time is taken from the start to the end of 2 to the end of wave 3 to compare this wave 2 with wave 4. Just to show you the count, 1, 2, 1, 2, 3, 4, 5, and then 4, 5. Now what you can see is that this wave 4 is over 6 times longer in time compared to your wave 2, which is incredibly uncommon. The common target time-wise for a wave 4 is between the 382 and let's say a 4, maybe 5 fib time, but ending a wave 4 after the 6 fib time is very unusual, and we do have to keep this in mind. Now I mentioned that it is possible for a wave 4 to continue ranging sideways as long as you do not take out this low, and that is a possibility when we look at this being a W, so wave C finishes over here, right? So you have then A, B, C, W, then a flat structure in X, and then look for a wave Y. In this scenario, wave Y can be a zigzag, a flat, or a triangle, but you continue the range and then only finish a wave 4 at a later stage. If we then go to the 1 hour time frame, then on the 1 hour, the bearish scenario is that we count this move to the upside as either a 3-wave structure in a wave W, an ABC, or we count an impulse to the upside here that is finished in a wave A. We then look for a bigger corrective structure where we do like to hit that 618 over here at 55.3k. Now also in this scenario, we would then be looking for a wave W, a wave X, and then a wave Y to the downside. Now important support to the downside is this blue box here between 54.1k and 54.7k. On the 15-minute time frame, this would then be what we are looking for. So here we then have our ABC in W, and now this is not labeled as a wave of 4, it is now counted as a wave A. So we have a 3-wave A, a sharp B, and then a wave C. Now in a flat, most commonly, your wave B is a zigzag structure. In order to count this either impulse or zigzag, you need to go to like 1 minute, 3 minute time frames. That's not something I like to do, but by all means, you at least respected the most common target area for a wave B in an expanding flat, which is between the 1.38 and the 1.236 taken from the start to the end of A with the normal Fibonacci tool. So in this scenario, we do not count this as a 4, it's now labeled a wave A, B, C, which based on Elliott wave theory and looking at ratio and time would actually fit a little bit better. Now then we still look for a wave Y to the downside, but in this case of course we want to see a deeper wave Y to touch that 618 and invalidate that impulse that I've shown earlier. Now it is good to know that we have now hit 2 886s. So first of all, the 886 over here taken from the start to the end of this first move down, and now the second 886. Now this one is taken from the high over here to the low that we have on the chart, but even if you would take it from over here, this high to the low over here for then potentially the W, X, and the Y, you can see that we also hit the 886. Now this is important because of our directional bias from an Elliott wave analysis point of view. The moment you hit an 886, the probabilities are low that a move to the downside is an impulse in a wave 3, right? So the probabilities go down for a wave 1, 2, and then much lower prices in a wave 3. The 886 is rare for a wave 2, common for a wave B or a wave X, increasing probabilities. Any move to the downside is a wave C or a wave Y, which in turn increases the probabilities to then come back up later and still take out the highs. So the probabilities are higher to still take the high. Now, when we look at the CVD divergences, then on a 15-minute time frame, this is what is going on at the moment. So you can see a lot of green lines. These are the bullish CVD divergences, and the red ones, the bearish CVD divergences. Now, if you see a check mark, it means the bearish or the bullish CVD has already played out. Now you can see we have some bullish CVD divergences here, higher low in price, lower low on the CVD. The target would be the high over here at about 58.2k. And more locally, you can also here see bullish CVD. However, be very aware as well of the 3-minute. So the 3-minute and the 50-minute, those are my two favorite time frames. On the 3-minute time frame here, we did see some bearish CVD divergences. And if not yet involved from a trading, no financial advice, but if not yet involved from a trading's perspective, then preferably I would keep an eye on the CVDs here, right? So what you want to see for price to move to the downside is the bearish CVDs to continue as price is then grinding to the downside, creating bearish market structure with bearish CVDs. The bulls want to see the opposite. I don't really care too much about the bullish CVDs that we have over here, right? I would like to see market structure change locally, supported by some new local bullish CVDs as well. Now, we also had some news today, and we still have news tomorrow. This over here was today, and tomorrow at 2:30 p.m. we have some high impact news. So make sure that you trade safe around that hour, and I will make sure I'm live on YouTube again. So if we then finally look at the probabilities of the different scenarios, then on the 1 hour, we just keep it very simple. The probabilities are higher to take out this high. Both the impulsive scenario as well as the bearish scenario look to take the high. So that is therefore what we are looking for. And on the 15-minute time frame, as explained, I'm never really a big fan of a wave 4 being over 6 times longer than a wave 2, right? It makes you think. It does make a flat look better, counting it as an ABC, so I won't be surprised to see a continuation of the range. But of course, we do like to see some local weakness first, which is what I mentioned, for example, the CVD divergences. And we did see some small bearish CVDs here. Now, of course, we then like to see that continue. If price turns around, local market structure to the upside with bullish CVDs, well, we're going to be looking for price to take the highs already. All by all, we want to have a solid plan in place and keep an eye on the 3 and the 15-minute CVD divergences. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.